Okay, so this is the third and last video in this series that we're conducting involving testing the turtle trading systems. And we're going to now conduct a test of turtle system 3, which is basically a combination of turtle systems 1 and 2. So in this test, what we're going to do is System 3 basically involves using System 2 in case a trade would be skipped using System 1. So if you recall, in Turtle System 1, there's a PL filter that screens some of the 20-day breakouts. And so if that screen is in place, if that filter is in place, then we would simply wait for the System 2 signal, which would be a 55-day breakout. So that's what we're going to go do here. So I need to edit this trading session. This particular session here in Trader Studio includes 31 different US traded futures markets. So we've got Turtle Failsafe, that's basically System 3. We're going to go with a $25 per round turn commission, $50 slippage. And here's the markets that we're going to be testing. And now we'll just go ahead and click on that. So A1 is our 20-day breakout, B1 is our 55-day, C1 would be our 10-day exit, D1 if we use the Turtle System 1, and D1 would be our 20-day exit if we're going to use System 2. And again, we'll use the 2N hard stop for losing trades when we're not stopped out using a trailing stop. So we'll go ahead and click OK, and we'll test this going back to about 1980 or 81 or so, one contract at a time, and you can see it's conducting that test now. So I'm going to go ahead and pause the video until these results are finished. Okay, so we're just about done conducting this test, and then we'll be getting the results here momentarily. And again, we're only trading the strategy one with trading one contract at a time. We're not employing our money management algorithm just yet. And given that it's testing 31 different markets, this usually takes a minute just to build up all these reports. Okay, so there we've got almost 9,000 total trades and just under 34% total winners. And the beauty of it is you can see every single trade. So I've also got the entry name. So here's the failsafe buy, failsafe sell, and whatnot. And if you go down here, here's the actual 20-day breakout trades as well. And it compiles every single trade. So you can see these are the dates of the trades. This would be the number of contracts, the price, and this is the exit date and the type of exit signal as well. So this is really an excellent program, and it's fairly inexpensive compared to some of the other programs out there. So then here's our active orders as of June 30th, 2014. I'm doing this test on July 1st. And here's our breakdown on a yearly basis as far as profitability goes. So again, 2008 was a big year. So now what we need to do is we're going to open our trade plan, and it's our $1 million trade plan because we're testing this strategy using $1 million account just to kind of make it compatible to what normal commodity trading advisors would be trading. So this is clearly this would not be an opportunity for the individual trader, because most people obviously don't have this kind of money. And if you have a small account, you're certainly not going to be trading 31 different markets. So we'll just set that back to about 1980. And here we go. So we'll conduct this test. This will take about 5 minutes to run. You can see at the bottom of the screen that it is running now. So I'm going to go ahead and pause the video until the test is just about complete, and then we'll see the results of turtle system number 3. Keep in mind, this is just hypothetical testing, and this is based on using continuation futures data provided by premiumdata.net. And we'll be back in a minute. Okay, so we're just about done with this test. We should be getting the results here in another minute. And keep in mind, if you have any questions, or you want to learn more about the turtle trading systems, or just futures trading in general, please visit our site at www.thefuturestradingacademy.com. And in a moment here we should have all of our testing results, and then we'll see if this has been a profitable strategy. And over the long run it has, but what we'll see here is that the last few years it's been a difficult strategy. And if you look going back to 2009, basically 4 out of the last 5 full trading years have been down years for this strategy, and halfway into 2014 we're also down again with this strategy. So if you go back to the 1980s when this system was taught to the turtles, you can see, even though we're risking a very small amount of our capital, at just 0.5% of our equity, it was producing really nice returns, particularly 1987, nearly 76%. Of course, this is hypothetical, of course, these are just simulated results. But since then, the performance has been very inconsistent. We had that big year in 2008 with all that market turmoil, and that's basically what this type of strategy is designed to capture, is those black swan events. So let's look at our compound annual growth rate, 9%, but we had a max drawdown of 62%. So that's, for most people, that's simply just going to be completely unacceptable to accept that kind of volatility for such a low rate of return, because you're not going to get that kind of volatility in the stock market by holding blue chip stocks. And basically that's what you're trying to compete with as far as a futures trading portfolio. Now again, we can see the trade by trade, and you can see here this is the size of each position. And so our money management algorithm is definitely kicking in here, and you can see all the individual trades, over 8,000 of them, going back to about 1981. So again, before you buy into any kind of a trading system or strategy, it's a good idea to conduct your own testing if it's possible to quantify that strategy. And I would argue that's probably not a good idea to trade any strategy that's not quantifiable. Most of the technical analysis stuff that's taught out there, a lot of that's not really quantifiable. So, but that's what most new traders are actually using. But the commodity trading advisors and hedge fund managers out there are generally using quantifiable, quantitative trading systems. So that concludes this particular video regarding turtle system number 3. And if you have any questions again, or comments, or you Want to learn more about trading futures and trend following and other strategies, please visit our site at thefuturestradingacademy.com, and we'll see you down the road.